Let's talk money.
But we thought it's important to clear the air so that mutual fund investors know what's going on. So first things first, tell us your interpretation of what's happened. We know that this is a big legal case. It's probably going to go on in the courts. And SEBI is looking to impound a large sum of money, almost 5,000 crores, because it feels that this one global entity was, abusing our market framework. Should mutual fund investors be worried?
Right. Thanks, Ruby. Thanks for having me. So my one-line answer is absolutely not. Mutual fund investors should not worry. Thankfully, SEBI has many guardrails and very strict regulation around how mutual funds can participate in F&O market. The issue that has happened has impacted or will impact most likely the weekly option market in India. Mutual fund per se do not usually get into or participate into weekly option market. Largely, mutual funds are allowed to participate in F&O only for hedging and rebalancing purposes. And the participation is largely in the futures market. And if at all in the option market, it is in the monthly expiry market. So weekly expiry market, mutual funds largely do not participate. And hence, there is nothing to worry for mutual fund investors because of this entire issue.
Okay, so that's reassuring to hear that we don't need to worry. But just to understand this a little better, Niranjan, what you're saying is that mutual funds, equity mutual funds, whether it's large caps or mid cap or a flexi cap fund, typically they will not have any participation in the options market. If at all, they might have some hedges, but that's through the futures market. Is that right?
That's correct. That's correct.
Okay. Also, are there any regulations that restrict mutual funds from overall F&O trading? We know that the regulation for mutual funds is far more tighter. It's the new asset class, this, the other SIFs, where SEBI is looking to relax it. We'll come to SIFs later, but just set the rules straight in terms of F&O. What can mutual funds do and what are they prohibited from doing?
Great. So in mutual fund, if you see, largely hybrid mutual funds are usually the ones which trade or take exposure into F&O market. As per regulation, mutual funds are allowed to participate in futures and options only for hedging and rebalancing purposes. No naked exposure is allowed. No leverage is allowed. So if at all a future exposure is taken, it is only for hedging purposes. Even if it is taken in the option market, it is probably a covered call strategy, which is against hedged. At the same time, leverage is not allowed. So even if there is an exposure into futures or option, the overall exposure in the mutual fund portfolio cannot go beyond 100. So the beta that we talk about is basically within that limit of 1. So once the leverage is not allowed, a lot of other risk parameters gets checked. Now, within hybrid funds, if you see, there are funds like Balanced Advantage Fund, which take exposure into hedging, into futures for hedging purposes, because they reduce equity level from maybe 70-80% to as low as 30-40%. This reduction in equity exposure is done via taking some future exposure. But as I said, it is a hedge exposure. There is another category, which is equity savings fund. Equity savings fund also use derivative exposure, but again, it is to create an arbitrage exposure, which is completely hedged, 100% hedged. Other funds like multi-asset allocation funds, they may also use derivatives, but again, it is for hedging purposes. So largely, mutual funds, as I said, are allowed to take exposure only for hedging.
Let's talk money.